Hey, welcome back. In this video, we're going to talk about Palantir earnings and HIMS earnings. Both are multiple six-figure positions in the portfolio, and I'm going to get rid of half of one of those positions. So I want to kind of deep dive into exactly what I'm doing now that earnings are over, and let's go ahead and dive into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. If we take a look at the portfolio, I just hit brand new all-time highs. And if you do want to see me hit my 8-figure goal, please be subscribed by clicking the subscribe button down below. And if you get any value out of this video whatsoever, please consider hitting that thumbs up button, as I really appreciate you being here. Also, if you do want to join my private mastermind where we have 280 high-level investors and options traders, that'll be at the top of the description. I just uploaded a brand new client testimonial right here with our client Mark, so check that one out. Also, if you want my free trades of the week, that'll be on my Instagram and my free newsletter, which are both down in the description below. But let's go ahead and talk about the markets first. QQQ rebounding back from that dip we saw on Friday. I told you guys that was the dip. That was what we would get, and that quickly got bought up today. 564 on QQQ, which tracks the NASDAQ 100. That was a perfect dip entry, and VIX is still pretty elevated here at 17. So there's still some opportunity to take advantage of cash secured puts on my favorite stocks. And I'm going to talk about which ones I'm doing on Palantir and what I'm doing with HIMS as well. But with this VIX allocation, okay, this tells me, let's take a look at the VIX cash allocation levels. As you can see, we're trending somewhere right here, VIX 15 to 20, kind of right in the middle. So right now I'm pretty cash poor. I have about 13% cash on the sidelines because I'm very aggressive. I want to take advantage of this slight fear, and the VIX helps me do that, and it keeps me safe for any downturns in the market. So as this trends lower, as this trends back down to 15, I'll probably have 20-25% cash in the portfolio. But let's go ahead and jump into the very first stock. Let's talk about Palantir, okay? Palantir tops $1 billion in revenue for the first time and boost its future guidance. So absolutely crazy that Palantir can just keep hitting these numbers. The AI software provider's revenues grew 48% during the period and hit $1 billion for the first time, okay? Lots going on here. If you take a look at Palantir after hours, it's up about 4%, 168, okay, almost to that 170 mark. And I said in previous videos that this could definitely be a $200 stock by end of year, and that wouldn't be far-fetched, okay? Now, Palantir is approaching valuation levels that are getting close to that 1,000 PE ratio. Like I talked about several months ago, even before the crash in the stock market, I said, it wouldn't surprise me if Palantir is a 1,000 PE ratio stock, okay? So there's a few things there, all right? Let's dive back into the earnings. We're gonna go to the Palantir Investor Relations report, okay? US revenue grew 68% year over year. Total revenue, 48% year over year. Those are pretty serious numbers, okay? Serious numbers. They closed 157 new deals of 1 million, 66 deals of 5 million, and 42 deals of at least 10 million or more, okay? We're gonna scroll down here, and I wanna look at the free cash flow, okay? Adjusted free cash flow, $569 million, representing a 57% margin. That is pretty big for free cash flow, okay? And their cash and equivalents and short-term US treasuries is $6 billion. So they have tons of cash on hand, very little debt, and huge margins here, okay? This type of free cash flow is not something you typically see, in most companies, but this company is growing very, very fast. Now, what concerns me with Palantir is their concentration with their customers, okay, with their clients. Now, they are expanding their commercial revenues. Commercial revenue grew 93% year over year, and they are expanding the amount of companies they're working with. So being that they are still a newer company, okay, they still are a newer platform, AI platform, the cost to acquire these customers is, virtually not that much, because really they just have to go in, do a presentation, say, hey, we're going to implement this for free just to show you how it works. And then if you like it, boom, you sign a deal and, voila, huge deals underway. Now, mind you, that is a very dumbed down version of what actually happens, but essentially they're not spending money on Facebook ads, YouTube ads, Google ads, Twitter ads, all that kind of stuff, right, to acquire customers. They're acquiring huge deals. So, overall, I really like the way they're going, and it surprises me, and I'm not surprised that the stock actually went up. So let's talk about what I'm actually going to do with Palantir, okay? Palantir tomorrow, it's going to be close to 170. It might even hit 170, all right? It might hit this level up here, all right? So if we dive into the portfolio, I said, hey, on a downturn, like on, lackluster earnings, this thing could get all the way down to 140. And of course, it went to 168. So let's kind of dive into exactly what I'm going to do with my position. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes. Results may vary, but if we take a look at the portfolio, okay, I actually today rolled up my 133 puts, okay, that I sold. I closed those out and I opened up the 139 puts. That was a good idea, okay, obviously, because now I'm playing earnings. These will be at, full profit there, okay? Now, if we go into the position, you can see I have 4 cash secured puts, which totals to, let's see the total, 109,000, okay, 109,000. With earnings being over, all right, I'm actually going to scale up this position. I'm going to scale it up to about 130, maybe even 140,000. Now, you might be saying, Ryan, that doesn't make any sense. PE ratio is at an all-time high. Stock is at an all-time high. Well, looking at their free cash flow, their margins, and everything they're doing, their expansion, and basically Alex Karp's word, and he's a man of his word. Obviously, the company is doing very well. I feel safe selling cash secured puts at a safer delta, 25 delta, further away from the stock. So if we go to the options chain and we go to the end of the month just to see if we could, collect some premium, if I could collect some premium just for August, I already have the August 8th, so these ones will close out. I'll close out tomorrow, and then we'll open up some more premium for August. I'm probably going to go somewhere between the 20 and 25 delta. So that would put me somewhere between, let's just say 143, okay, and 149. Yes, that's pretty high up. If you look at the stock, okay, that's going to be somewhere 143 to 149. Let's just go to 149. That would be right here. So we'd still be below this mid-Bollinger Band line, okay? And if we go to how far away from the stock that would be, let's just say tomorrow we hit 169, right? That's about an 11% dip. Now, I've seen Palantir dip as far as 25%. That is not far-fetched for Palantir to do something like that. Yes, it could go down 20, 25%. Let's just say 25, all the way down, potentially even down to this 125 level, which was previous highs, okay? In that event, I'm still fine owning at 149 at this current stage, okay, after earnings. I don't think that's going to happen. It's not very likely. But, I do feel comfortable after the earnings and just them crushing it every single quarter that this is a very, for me, it's a predictable stock, right? The upward trend on this stock is just extremely predictable, and it's very easy to trade the wheel strategy on. So I'm actually going to get more aggressive on Palantir despite their PE ratio being as high as possible and, and the stock being at all-time highs, okay? Because the earnings and the fundamentals are on point, okay? Yes, investors love the stock. That's why they're piling into it, but their earnings and fundamentals are on point and they're just getting started, right? This is recurring revenue that they're building, and they haven't even tapped out their commercial sector, right? They haven't even tapped out their customer base that they potentially could get in the commercial sector because, things are spreading word of mouth. Hey, AIP works really good for our business. You should implement it, right? So with that being said, again, tomorrow, probably going to go out to August 29th for at least some more premium for August. Grab these 149s. I'll collect 650, which is a 4.7% ROI. Results aren't guaranteed because these numbers fluctuate by the time you're seeing them. But I like that strike, okay? Going to get very aggressive here. All right. We go back to Palantir again. these dips happen, and that's like something you have to be okay with some, and that's why I do the cash secured puts, because at least I could get assigned at a slight discount and then sell some covered calls for income if this thing goes down 47% like it did in the last crash. All right, so that's what we were doing during the last crash. I got assigned in the 90s. I got assigned at 101, 103, and this thing went all the way down to 67, and I was still collecting covered call income. So that's the plan there. I like this stock long term, and it looks like they're just going to keep crushing earnings. So free cash flow is high on the company. That's why I like it. So let's go ahead and get into HIMS and exactly why I'm actually going to reduce my position size by almost half. Okay, HIMS $63, after hours $54. Okay, luckily it didn't go outside of the expected range. The market makers were pricing HIMS to go down about $10, and that's exactly pretty much what it did. Went down almost $10. Okay, so I was selling puts outside of the expected range for earnings. So that was a good thing, because I said, hey, if it does happen to go outside of the expected range, I'm getting a massive discount here. But my puts are outside of this range. So let's talk about HIMS and HERS, why the stock fell 10% on the revenue miss. Okay, so they did miss revenues, but they still, their revenues increased by 73% year over year, which is massive. Okay, that's a massive growth story there, right? They reported adjusted EBITDA, $82 million for a second quarter, up from $39.3 million last year. So the company's growing its revenue, it's growing its EBITDA. Okay, they are facing some headwinds, obviously, with the whole semaglutide thing, but they've made the right acquisitions of Zava and the Canadian market to be able to basically Novo Nordisk's patent rights for semaglutide for Wegovy are ending in 2026 in Canada. So, of course, HIMS and HERS Health is taking advantage of that. Now, if we take a look at their second quarter financial highlights, all right, this is what I want to look further into, and I want to show you why, the company may be a little bit higher risk than usual. Yes, PE ratio is low, but what I like to look at is actually free cash flow, okay? Revenue, $548.4 million, okay? That's an increase 73% year over year, 76% gross margins, huge. Net income, $42.5 million, great. Okay, but when we look at free cash flow, all right, the second quarter free cash flow was actually negative $69 million for the second quarter compared to $47 million positive for second quarter of last year, okay? Now, what does this tell us? Well, it tells us that their capital expenditures, what they're spending to acquire customers and run this business, is pretty high, right? Now, mind you, they are in a growth phase. This is a very small company, okay? And because they're direct to consumer, they're spending money on YouTube ads, on Facebook ads, on Google ads, on many different types of ads, right? To acquire a customer, in which that customer gets on their subscription plan, and then they will make a profit from that customer maybe 3 months in. If they spent $100 to acquire the customer, they have to make that 100 back. Maybe it takes 1 or 2 months, and then the third month they're profitable, okay? So that's kind of how direct-to-consumer businesses work. And, that's just something to be mindful of. If they have to keep spending more and more money with rising ad costs, definitely something to be aware of. So not saying that the company is, on the downturn, but this is a little bit concerning, the free cash flow. I do want to see a better quarter next month with this free cash flow number. If they could do that, just get this down a little bit less negative or even slightly positive, that would be great, okay? Mind you, they did spend a lot on new employees. They just hired a few new executives, right? Chief Product Officer, VP of AI, right? So they have new capital expenditures coming in by hiring new employees and acquiring more customers. So just something to be mindful of, but let's take a look at the chart. All right. The stock fell all the way down after hours to 53. So, right, it's trading at 50. Is it 53? Let's take a look. 54. Okay, 54. So massive discount on the company. PE ratio is probably going to be pretty, lower than what it is now. PE ratio is, after today's close was 92. So tomorrow might be, who knows, somewhere in the 70s. Okay. So falling down to 54.81, that's a negative 13% drop. Pretty good, right? Now, if we take a look at my positions, all right, let's go to the positions. I actually upped my position today. I did 552 puts right outside the expected range for earnings, okay, to collect 500. Now, these ones will probably expire worthless, or tomorrow I'll be able to at least take some off the table at a profit, maybe not the full profit, but a smaller profit, maybe half of this. And that's fine because I want to reduce my exposure. So I'm probably we're at 126K in cash secured puts. I'm probably going to get this down somewhere in the 70K to 80K range, just to be a little bit safer, as this is a very high risk play, but the premiums on this play are definitely, higher ROI. So let's just go out to August 29th, okay? And these numbers aren't reflecting right now, but if we go to, the 20 delta, right now it says about 3.46% ROI, which is pretty high for a 20 delta. So that would be the 47 strike. That's probably where I'm going to feel comfortable playing this stock, somewhere between, 15 to max 25 delta. Okay. So 49 strike, I'll probably play somewhere in this area, and that would meet my ROI goals. Obviously these numbers aren't guaranteed because the stock fluctuates, but anywhere from 2.75 to 4% ROI is good for me. So that is, where I'm going to start playing this stock going forward. Am I less excited about HIMS? No, I'm not less excited. I just want to make sure that, because the earnings this quarter weren't super stellar, I do want to see what next earnings play out to be. And then, based off of that, when the time is right, because how I play stocks is like, I want the company to prove themselves. I don't need to be first one in. I just want the company to prove themselves, and then I will get very aggressive, as you've seen me get aggressive on like Robinhood, right? My position on Robinhood is 140K in cash secured puts. Very aggressive, great earnings, great cash flow, great margins. Boom, I go all in, right? So that's kind of what I want to feel with HIMS. And this earnings really didn't do it for me. This was not, they weren't horrible earnings, but just not the strongest. So that's probably what we're going to do tomorrow. We'll probably take these off. That'll reduce this by a little. And then maybe we'll trim some of these 50s, and then we'll hold the rest until expiration. Totally fine to get assigned at 50. That's fine. Again, like I said, preferably I'd like to get assigned somewhere in the 45 to 49 range. But if I get assigned at 50, that's fine too. Because if we go to the covered calls, what's nice about HIMS, if you go to the covered calls, there's a lot of premium to be collected on the covered call side, okay? So, the covered call side is paying out quite a bit, and that's fine with me, okay? So, we'll just run covered calls at the cost basis or slightly above to get some appreciation. But long-term, I like HIMS. I'm gonna keep playing it in the portfolio, just not as big right now. We'll wait until next earnings to see how those come in. But if you enjoyed this video, if you found it valuable, please give it a thumbs up, and I'll see you in the next update. Take care.